Have you ever looked at the stock market and just wondered, is there a formula, a secret code to finding those massive home run stocks? Not just the good ones, but the ones that become legends. Well, today we're decoding a system that claims to have done just that. It's called CanSlim. So let's get into it and see if we can crack this code together. And that's the man who created it, William J. O'Neill. And that quote right there, that's the key to this whole thing. See, CanSlim isn't based on some academic theory or what someone thinks should work. It's based on a deep dive study of the market's biggest winners throughout history. It's all about what actually happened. It's about reality, not opinion. And does that reality get results? Well, take a look at this number. An independent group, the American Association of Individual Investors, actually tracked the CanSlim system for 8 years. And the result? A mind-blowing 760% cumulative return. Yeah, that is the kind of number that makes you stop what you're doing and really pay attention. So how on earth did he figure this out? Well, O'Neill basically went on this epic quest. He became a kind of market detective, digging through over 100 years of data, looking at all the most successful stocks. He wasn't searching for some magic trick. He was looking for a pattern, a set of common traits these super winners all shared right before they made their huge moves. He was determined to crack the code. And that's the code we're breaking down right now. We're going to go piece by piece, starting with what he called the earnings engine. Then we'll get into the company's actual DNA. And finally, we'll zoom out and look at the big picture. We'll even cover how to put it all to work and help you figure out if this is a good fit for you. All right, let's start with the absolute core of the system. These are the two letters O'Neill said were the most critical of all, the C and the A. And it's all about one thing, earnings. Okay, so the C stands for current quarterly earnings. Now, this isn't just about a company making a profit. It's about a huge jump in that profit right now. O'Neill was looking for earnings per share, or EPS as you'll see it, to be up at least 25%, and ideally much more, compared to the same quarter last year. It's a sign that the company is hitting a major growth spurt. But, one fantastic quarter could just be a fluke, right? That's where A for annual earnings comes into play. O'Neill also wanted to see companies that had a solid track record of growth over the last 3 years. This proves that the current success isn't just a flash in the pan. It's built on a real, solid foundation. And when you put these two together, it's just incredibly powerful. Get this. O'Neill's research found that a whopping 3 out of 4 of the market's biggest winners showed earnings increases of over 70% in the quarter right before their stock went parabolic. The numbers don't lie. Big earnings often come right before big stock moves. Okay, so we've got the earnings engine firing on all cylinders. Now let's move on to the next 3 letters, N, S, and L. This is where we look past the spreadsheets and into the very DNA of the company itself. N stands for new. You see, it takes some kind of powerful catalyst to send a stock to the moon. This could be a revolutionary new product that changes everything, a new CEO with a brilliant new plan, or even huge changes in the entire industry. O'Neill also included a technical signal here, the stock price hitting a brand new high after building a solid base, like that famous cup and handle chart pattern. It's basically a signal that something fresh is happening. S is all about supply and demand. It's really just basic economics. Think about it. If you have a great company with a relatively small number of shares available for the public to buy, and then a bunch of huge institutions start buying it up like crazy, what happens? That huge demand and small supply can act like pure rocket fuel for the stock price. It's that simple. Which brings us to L. And this is a question you absolutely have to ask yourself for any stock you're considering. Is this company a true leader in its industry, or is it just a laggard, kind of riding the coattails of the real players? O'Neill was super clear about this. A true leader isn't just the biggest company or the one you've heard of. It's the one with the best earnings, the best sales, and the best price performance compared to its peers. You want to avoid what he called the sympathy laggard. That's the number 2 or 3 company in a hot industry that people buy because the leader looks too expensive. No, you want the best of the best. So we have a great company with fantastic earnings and the right DNA. But even the best company can be a bad investment if the timing is wrong. That's where the last 2 letters, IM, come in. This is where we zoom out and look at the big picture. I stands for institutional sponsorship. We're talking about the big money here. Mutual funds, pension funds, all the major players who really move the market. When you see a growing number of top-tier institutions buying a stock, that is a massive vote of confidence. It tells you that the smart money is on your side, and it provides a ton of buying support for the stock's price. And finally, M for market direction. Honestly, this might be the most important rule of them all. O'Neill's research proved that 3 out of every 4 stocks, even the amazing ones, are just going to follow the overall market trend. You can find the perfect company, but if you're trying to buy it while the whole market is crashing, your odds are pretty bad. You want the wind at your back, not swimming against the tide. And this visual just explains it perfectly. When the market is rising, a bull market, the true leaders play amazing offense. They just blow past the averages. But when the market is falling, a bear market, they play superior defense. They go down less than everyone else. That right there is the hallmark of a high-quality stock. Okay, so that's the 7-point checklist for what to buy. But knowing what to buy is only half the battle, right? A system is totally useless if you don't have rules for when to sell. So let's look at how CanSlim makes this a complete discipline. The sell rules are every bit as important as the buy rules. The first one is the golden rule. You cut every single loss at 8%. No exceptions, no excuses. Think of it as your insurance policy. On the flip side, you generally want to take your profits when you're up about 20 or 25%. But there's an exception. If a stock is a real monster and it jumps over 20% in just a few weeks, you hold it for at least 8 weeks. That rule is there to stop you from selling a massive winner way too early. So that's the system in a nutshell. It's a tough, disciplined method for both buying and selling. But now for the million-dollar question. Is this type of investing, this focus on growth and momentum, actually a good fit for you? Well, to help you figure that out, it helps to compare it to something like value investing. Value investors are like bargain shoppers. They're looking for stocks that are on sale, things they can buy for less than they think they're worth. A low price gets them excited. CanSlim is basically the opposite. It's not about finding what's cheap. It's about finding what's best. It actually buys stocks that are breaking out to new high prices, seeing that strength as a sign of quality. And that's really the bottom line here. CanSlim is a system built from the ground up for growth investors. The entire point is to identify the absolute best companies out there, the ones with the hottest products, explosive earnings, and unstoppable momentum, and to buy them at that perfect moment when they're ready to launch. And this isn't just some old theory in a book. These principles are so clear-cut that they've been built into modern software. Tools like the IBD Stock Checkup literally run a company through the CanSlim gauntlet and give it a grade, pass, neutral, or fail, on all the key criteria. It's a real-world application of the exact code we've been talking about. And there you have it, the 7 traits shared by the market's biggest winners, discovered by looking at over a century of history. We've laid out the whole code, from earnings power all the way to market direction. So the only question left is, what are you going to do with it?